The U.S. government is done. It can't continue the Ponzi anymore because there's no suckers left to buy. And so it's the American public, the dollar holders that are the bag holders, because now they own a currency that is going to collapse in value. Long way to rise to catch up with the inflation that's already been created. Forget about the inflation that they're going to create in the future. And they're going to create a lot. You know, when nobody wants to buy U.S. Treasuries, when we get to that point where the bond market really starts to collapse and the Fed has to be the buyer of only resort, yield curve control, when that happens, then they're going to flood the economy with even more inflation.
So gold's peaking at that $2,000 mark like a kid at a toy store window. And Peter, when he's not playing Monopoly in real life, he's running the show over at Euro Pacific Capital. Heads up, inflation isn't just what happens to your beach ball. Think of it as the magician at a kid's birthday party. Suddenly, where did our money go?
I was pretty sure that we had just seen the lows in gold. And the reason that I was pretty sure was because we had that outside reversal day. We got the jobs report on that Friday, which came out much better than expected because, people don't look beneath the surface to see all the crappy jobs that were being created. They just look at the total number and they don't bother to check, how was that comprised? The fact that we lost 800,000 or 900,000 full-time jobs and replaced them with 1.1 million lousy, low-paying part-time jobs is not good news. And the fact that all these jobs went to people who already had jobs and would prefer not to have a third job, again, this is evidence of weakness, not strength.
Ever hear of Jolt's job stats? Imagine swiping right on a dating profile, only to find out it's a penguin. Might want to double-check those figures, especially now when work meetings look like pajama parties.
This has almost done a complete round trip. So the money has come in to buy the dip in gold, which is what I expected. The next thing for gold to do is to get back above 2,000. That's where the resistance is. And to see if we can test that resistance and then break through. Because once gold really starts to move, let's say we take out 2,100, I think these 64 days will be par for the course. I think we're going to have a lot more of these days. In fact, I think we're going to have bigger days. I think we're going to see days where gold is up more than $100 a day, because gold has a long way to go to catch up to where it needs to be.
All right, about the national debt, picture it as a prank you started, and now it's spiraling out of control. At this rate, we're eyeing a whopping $70 trillion by the decade's end. Makes that sneaky online shopping spree feel like pocket change.
And even though the money is less cheap than it was, the borrowing and spending are continuing unabated. And so the rate hikes have really had no effect yet because they haven't been aggressive enough, given how much inflation has already been created. And again, that's another thing that this guy and other people don't get. When the Fed spends over a decade creating inflation, again, remember, what did they say? And not just on our side of the Atlantic. The ECB was saying the same thing. The Japanese were singing the same song. We don't have enough inflation. Inflation is too low. We need to create inflation. Every central bank had a policy of we need inflation. We must create inflation. We don't have enough inflation.
If the economy had the sniffles, cutting interest rates is like feeding it ice cream instead of soup. Sure, it's tasty, but there might be a meltdown later.
Glad that we didn't have more inflation. But the politicians made up this ridiculous 2% target and said we're not there and we need more. And so because of all the years of deliberately filling the pipeline with inflation, now we've got the deluge. Now we're beginning to see the consequences. We're on the cusp of it. We're early days in the process. Prices have a long way to rise to catch up with the inflation that's already been created. Forget about the inflation that they're going to create in the future. And they're going to create a lot. When nobody wants to buy U.S. Treasuries, when we get to that point where the bond market really starts to collapse and the Fed has to be the buyer of only resort.
Speaking of meltdowns, bond investors, they're acting like toddlers skipping a nap. Unpredictable, to say the least. But with inflation doing the cha-cha, perhaps gold shimmer isn't just for pirates.
Gold shrugged that off. We didn't have a big sell-off in gold like we might have in the past off of a hot CPI. Again, reinforcing the fact that gold has seen its lows. We've tested support below 1900. It was a big test. It got way below 1900. It never got below 1800, and the buying came in with a vengeance. And again, now we're 1930 and change. I think we're now headed back up to test the other side, and we'll see if that resistance continues to hold or if it fails. I mean, my money is that it's going to fail. The question is when. Will this be the time, or is it going to have to bang against that wall a few more times? We'll see. But I added, personally, I bought more gold stocks on this dip. I mentioned that on the podcast, that I was in there buying with my own money on that dip.
Why is gold getting cozy with $2,000? Picture the global scene as a soap opera with extra twists. Political drama? Gold's price takes the elevator up. Logic left the chat.
What are they going to do? They going to raise another 500 basis points? Are they going to bring rates up to 10%? I don't think so, but that's what the market would require. But they're not going to do that. They're pretty much out of ammo, right? And so when the markets digest this, you know, a $66, $63 day in gold, that's going to be a small move compared to what's going to happen when investors figure it out. And more importantly, the bond market is going to get clobbered. It's not going to matter about this so-called safe haven because of, you know, the Middle East. Bonds are a risk asset. They're not risk off. They are nothing but risk because you have inflation risk. Forget about default risk. Inflation is the real risk because that's how the government defaults.
Powell's strategy? Let's give that money printer some extra caffeine. For him, inflation's more like a ghost story. Spooky to hear, but not sure if it's lurking in the hallway.
The people who really need it, the people who are broke and depend on it. And of course, one of the reasons they're now broke and depend on Social Security is because the government taxed the hell out of them when they were working and left them that way. It's like the government cripples you, right? And now, you know, you're left crippled, and so they hand you a crutch. And you think, yeah, you depend on this government crutch. Yeah, but if they didn't cripple you, you wouldn't have needed the crutch. You could have walked on your own. A lot of people who need Social Security would not need it had the government not taxed the hell out of them when they were working, and they could have taken that money and they could have saved for their own retirement. But we're at the reality where this Ponzi scheme is up, and we need real cuts in Social Security, Medicare, Obamacare, government pensions. Everybody is going to have to take a haircut. If not, we're all going to take a crew cut through inflation.
Quick note for the gold enthusiasts. It's had its roller coaster moments. Every so often, the US dollar steps up its game and gold's value dips faster than a dropped phone signal. And speaking of dips, remember 2013? Gold sure does.